As a user, as a borrower, why do you think I would choose Milo just instead of selling my crypto and buying property outright?
We help people not sell their Bitcoin when they want to buy a home. And the way we do that is I saw the need that at some point in time, individuals that were amassing Bitcoin wealth would have to make a decision. Do I sell my Bitcoin now to buy the things and the items that I need in my life? If you have high quality assets, the optimal aspect is to borrow against them and leverage them, not sell them and let them continue to appreciate.
Volatility, liquidity squeezes, unclear regulation, all of them might be a threat. But which one feels like the biggest risk day to day, at least for you?
We believe Bitcoin will continue to go up, but we also know that it's not a straight line. And I think that that's probably something that a lot of people need to be reminded of, is that your model and your decisions need to be stress tested for 50% up and 50% down.
Hello, I'm Dr. Lorena Nessi from CCN. Today, we're joined by Josip Rupena, CEO of Milo. Crypto and real estate don't usually sit in the same sentence. Yet Milo has built a model where digital assets can back a mortgage, something that challenges both traditional banking rules and crypto's reputation for volatility. We'll explore how this works, the risks involved, and what could this mean for the future of home ownership. Josip, thanks for joining us. Welcome to CCN.
Yeah, it's wonderful. It's a pleasure to be here. Thank you for having me on.
Thank you. We're going to start with our first question, which I guess it would be straightforward. I would like to know, in simple terms, how can you explain what Milo offers and how it works in practice?
So it's a great question. It's definitely one I've gotten before. I think the simplest way of basically putting it is that we help people not sell their Bitcoin when they want to buy a home. And the way we do that is we help clients be able to buy a home. We finance 100% of the transaction for them. The condition is that they have to post their Bitcoin with us in one of our qualified custodians. We work with Coinbase and we work with BitGo. And that collateral will sit there. So in an example of someone wanting to buy $1 million home, they're going to post $1 million of Bitcoin. And we're going to have a lien on the property as well. And in that case, we can get comfortable with lending at a much higher loan to value than you would from a traditional mortgage, which ultimately solves one of three things for them. It solves the aspect that they don't have to sell their Bitcoin to put down a down payment, like in a traditional loan where you have to sell 20 or 30% for a down payment. Two, the opportunity cost of that Bitcoin continuing to appreciate, which Bitcoin for the last 15 years has been one of the best performing asset classes in the world. So there's a huge opportunity cost to them selling their Bitcoin for that down payment, or even worse, selling it for the full purchase of that home. And three, they're able to qualify. Many of our clients have a lot of Bitcoin wealth, but unfortunately don't have all of the necessary requirements to qualify for a conventional loan. So we really help them with all three of those things, and we're able to get them to buy homes.
Brilliant. And is it Bitcoin only, or do you use other cryptocurrencies?
So we accept Bitcoin and Ethereum. I would say that the majority of the transactions have been in Bitcoin, but we do accept both assets.
Okay, brilliant. And what made you pivot to crypto holders as a core audience when they are normally locked out from US traditional finance?
So I had been in the space and buying Bitcoin from 2016. And I saw the need that at some point in time, individuals that were amassing Bitcoin wealth would have to make a decision. And that decision would have to be, do I sell my Bitcoin now to buy the things and the items that I need in my life, like a home or other significant purchases, which would mean that you would have to come up with a solution for them. And to me, that really resorted around lending, where from a concept that I drew from my previous experience working at Morgan Stanley and Goldman Sachs, is that if you have high quality assets, the optimal aspect is to borrow against them and leverage them, not sell them and let them continue to appreciate. So in 2016, 2017, I thought that would be necessary to see the continued growth of this asset class, and ultimately decided to start Milo around the idea of helping international clients buy homes in the US. And then back in 2021, we realized no one had really solved for this pain point for people that have Bitcoin, and the asset class had continued to grow, and we felt that at that point in time, we had raised a significant amounts of capital from investors with our business. We were already doing mortgages for a differentiated customer. We understood some of the pain points, so we felt we could solve for this and ultimately solve one of the areas that I thought would be what would be needed, and we were able to put it together in 22. So it really was not a lightning strikes type of moment, but more of an evolution of an idea And, I think as we fast forward to today, it's more present than ever because we're seeing more and more clients need this. And as the category continues to grow, this is a long-term trend that I view. And I think the product that we have is really going to help a lot of people keep their Bitcoin.
Brilliant. And in a severe market crash, collateral value can evaporate overnight. And we're talking about volatility being one of the biggest factors, right? So who bears the bigger loss in your model? Is it the borrower? Is it Milo?
For us, we just think about it from a risk perspective, right? So for an individual that takes out a loan with us, that individual gets to keep the upside of the Bitcoin and ultimately, right, the downside, right? If it goes down, the question is at what point does that change the decision, that we decided to lend to this individual? And today, on that $1 million example that I used, if the Bitcoin drops 65% and the Bitcoin's worth 350,000, they're going to need to post more collateral. So more collateral in Bitcoin, or they're going to have to pay off some of the loan.
What happens if the opposite happens? If suddenly your Bitcoin gets double the price?
So that's what's happened, right? So we started lending in 22 when Bitcoin was 40,000. We saw it go down to 15,000. Some clients decided to post more collateral, but no one was met with a margin call because there was sufficient drawdown where they didn't have to experience that. Some clients just proactively decided to post more collateral, but it wasn't required. And then on the other side, right, we've seen, the loans that we did when Bitcoin was 15 and 20,000, right? Today, Bitcoin's sitting at, 115,000. And for some of those clients, we've returned collateral, and others have decided to keep the collateral with us because we're working with great custodians that are qualified and they feel safety in that. And for some of other clients, they've told us, you've actually helped me by not giving me the access to, and maybe I probably would have sold Bitcoin maybe a little bit sooner. So in a way, we're really accommodative to clients and what they want to try to solve for. But it doesn't change our model if we have 100% of the value of the property or 200 or 300, right? We don't do anything with the Bitcoin. So it's not like we benefit in any way other than, maybe it's perceived as a safer loan, but we like the loan risk already, right, from day one.
Brilliant. So I think I might have the question for this, but I would like to hear your answer. Volatility, liquidity squeezes, unclear regulation, all of them might be a threat, but which one feels like the biggest risk day to day, at least for you?
I mean, I think that, the announcements of what's going on and, a lot of excitement around the space, I think that, I view as, leverage. As people start to take on more leverage in the system again, and they feel very, very good, and they only remember that prices only can go up when in reality they can go down. So I think to me that is something that I'm monitoring very, very closely because we've seen that over multiple cycles. Whereas people start to get complacent and assume that things can only go up, I think that that's when you have unintended consequences that unfortunately we had to experience in 22 with several companies failing, and that made it a very difficult subsequent couple of years, not for anything that we did as a company or other good actors did, but unfortunately some people in their risk management and maybe being over leveraged and overexposed. So I think we're starting to see maybe potentially some of that as more and more people just try to get creative with structurings, and some public companies doing different elements of that where maybe they don't necessarily understand the risk because right now it's only being considered that the price is going to go up and never the other way. And we have modeled our business on the assumption that not that we believe Bitcoin will continue to go up, but we also know that it's not a straight line. And I think that that's probably something that a lot of people need to be reminded of, is that your model and your decisions need to be stress tested for 50% up and 50% down.
Going into a little bit of regulation, are your loans legally classified as traditional mortgages, securities, something new? Who regulates you today?
Yeah, that's a great question. So, I think our ability to go out and offer this product was because we were licensed and heavily licensed on a per state basis in mortgage, right? We're creating a mortgage, we're putting a lien on a property, right? We're taking a credit decision on an individual. We have a very wide set of criteria that allows us to get comfortable lending to someone where it's not just Bitcoin. And even if you are doing a loan just against Bitcoin and without a home, it is still a loan, and you still need to play by those rules. And in the US, this happens to be on a state by state basis. So I think that, we've been a company that have accepted that from day one, run in that direction to do things compliantly where, we have, over 5 years of audits. We report quarterly. We have lines of credit with banks. So we're a heavily regulated and audited institution. So to me, that's a good thing, because that shows that we take that serious and ultimately, can portray the trust that a customer needs to get comfortable working with us. So we're not trying to go around regulation. I think we're understanding what the rules are, and we try to play by them.
So you wouldn't say that regulation is one of the biggest barriers. Which one do you think would be the biggest barriers for crypto to be used to get a mortgage as a mainstream?
I think it's more on the regulatory side than the licensing and on a per state side, right? I think that there was a number of things that came out post financial crisis with Dodd-Frank and other elements that really stifle innovation. Not necessarily because they're not good things, but I think that the level of restriction around them is what makes it very, very hard to innovate around mortgages, right? There's a lot of rules around RESPA, TILA, Reg Z, and all these different regulatory elements that came out that maybe were seen as a way of protecting consumers, and several of them may not protect consumers because it makes it much more challenging from an affordability for subsets of clients, right? Like ours, where they're very qualified, that have lots of income, lots of assets. They're foregoing the thought of buying a home because they don't want to sell their Bitcoin. But primarily, even if they did, they wouldn't qualify for a traditional mortgage. So I think that those are the elements that I think I'd like to try to see addressed. And then you're going to see more innovation in many different ways. And I think that's going to benefit a lot of startups and technology companies that are trying to tackle these problems. But the moment you start to unpack them, you run into a barrier. And then you have to decide, do you go over, do you go under, do you go around? And in many cases, for a lot of people, you realize where you end up with your offering is not necessarily what the customer needs solved for, and it's primarily because of that maybe overreaching structure, right, that was put in place.
So do you think this answers that you will be able to avoid the fate of other companies like BlockFi or Genesis, which collapsed despite collateralized crypto lending?
Yeah. I think the challenge for a lot of those companies was that they had many different business lines. And I think the strength of Milo is that, we're really focused on the lending side and on the mortgage side. And, we have an expertise there. We understand what the risks are, but we don't have other exposures to our business, right? There are things that we don't do, and we'll never cross that line, primarily around how we think about the client's collateral. What do we think about a loan balance, or how do we monitor risk, and all those elements, which I'm not saying they all equally did it poorly. I'm just saying I think that the abundance of the time and the desire to grow really quickly maybe force them to make certain decisions that put them in a position where, when the markets turned, they realized they were maybe more exposed than they should have been. So I think that the simplicity of our business is a strength, and I think that element of us being able to grow and scale is really going to be predominantly that we have survived those periods of time, and we view our business as that it's not something that can fail, right? We have a zero margin of error, and when a client gives us their Bitcoin, conceivably we might be holding it for 30 years. If that's how it transpires. So it's not our decision when they pay us back, it's their option, but we have to have a business that's built fundamentally on very firm footing so that we can be around for generations to come.
Brilliant. And as a user, as a borrower, why do you think I would choose Milo just instead of selling my crypto and buying property outright?
Yeah, I think that aspect is something that is very personal, right? The clients that work with us are individuals that, believe that Bitcoin is going to be worth much more into the future. And because it's going to be worth much more, that home that you might buy for $1 million when Bitcoin's 100,000, and if Bitcoin's $1 million, that might be a $10 million home. And the clients that we've worked with, some of those have experienced that. And it's been a very good personal decision and family decision to buy that home, but it's turned out to be a very costly financial one. And I think that we view ourselves as a company that hopefully can help them make those decisions. And if they choose to work with us, fantastic. We know how this product really benefits them and their family and their wealth. But if they decide not to, then hopefully they're making educated decisions, because we're not in a position, or ever want to be in a position, where we're having to convince someone of the merits of our product. We hope it speaks for itself. And if they find value in it, then we should exist. And if they don't, then they should go in a different direction. But ultimately, we're not really trying to push someone in any direction other than just say, look, this is what we think makes sense. This is what we would do, given our situation. We hold Bitcoin. We don't plan on selling it anytime soon. So we find ourselves that hopefully we're we're sitting on the same side of the table in every conversation.
Yes, in the end, history speaks for itself, isn't it? You
Absolutely.
can see how it has been. And are you exploring any tokenization of real estate assets or mortgage-backed securities with blockchain rails as well?
I think we definitely are, right? I think from the early days, we were always trying to think about what are the best ways for us to be able to capitalize ourselves, to be able to offer this for an asset, right? That has duration, that has a long, a time frame on it, like 30 years, like a mortgage. So we are exploring that. I am encouraged by what I'm seeing, that there's a lot more institutional capital that's coming in. There's a lot of innovation that's happening in the space. I think there's still a number of things that need to be solved for like a yield curve and assets that are not just traded immediately, but there's actually liquidity for them in sort of the tokenized ecosystem. I think a lot of the initiatives that are happening right now in the US with the Genius Act and many other bills that are being proposed, I think all of that is going to hopefully create a much clearer landscape of what's allowable and what's a structure that could come into play. But I think it's not a question of if, but when, more around that, because I think that definitely crypto and blockchain rails are far more efficient and superior in many aspects than sort of traditional finance rails. So I think that I see a world where almost all assets will be tokenized in some form. And then now the question is to be able to get the legal and the proper framework around them so that things can be leveraged and assets can be leveraged for things like loans with us and maybe a whole host of other companies. So I definitely see the world heading in that direction.
Yeah, slowly but surely. It always takes a little bit longer, right, than technologies. Do you think that Milo could evolve into a DeFi integrated lender, or is your future closer to being a regulated neobank?
I think right now, we've been playing by the regulatory side because of the complexities and, the requirements around mortgage. So, we focused our strength on that side of it. I think we're definitely monitoring what's happening with DeFi. I think there's a lot of interesting things around, capital formation and the ability to get exposure to a wider set of individuals. I think that some of the things that are the strength around, Wall Street and TradFi, predominantly to certain gatekeepers that have captive funds and insurance companies and banks and financial institutions, which bring an enormous amount of capital. So I see that as a positive. But then at the same time, I think DeFi democratizes some of these assets. An example, a mortgage, which, is very secure, it's very safe. Most individuals cannot get exposure to owning a piece of a mortgage security other than through maybe a big institutional asset management like a PIMCO or BlackRock. Even though that asset might be yielding a higher rate, that client can only buy it through some type of ETF or mutual fund structure. I'm not saying that's right or wrong. I'm just highlighting that it would be wonderful to be able to get a very high quality assets into the hands directly into retail over time. And I think that that's what potentially some of the more DeFi elements could possibly achieve, and really take that power that a lot of these large firms have and bring it back to individuals to be able to have a greater return on their personal side.
Yeah. Hopefully we'll see some of that in the near future. So we have covered, I think, the main big questions around Milo, volatility, regulation, the future of crypto and mortgages. But I'd like to know if there is anything you think we still should cover if we haven't touched on something that is key or very important.
Yeah, I think the element of what we're seeing with all of this regulation and sort of these bills and sort of these initiatives, I think there's a lot of thought around and maybe sort of the impatience of some people of saying, these things need to show immediate benefits to a set of individuals right away. And I view them much more as sort of foundational, where by setting the right framework around them, it's going to allow companies like ours and many others to be able to experiment safely around being able to help customers. So I think that aspect, maybe that patience piece of saying, Bitcoin's been around for 15 years and now we're starting to really build some momentum here, right, is to not assume that because these initiatives were not immediately game-changing for most people, to assume that they don't have merit. I think they have a tremendous amount of merit and benefit, whereas we've been in an environment where it was very difficult to innovate, where a lot of these initiatives got pushed offshore away from the US, where now it's the opposite, saying, no, this innovation can be here in the US. How do we innovate? How do we create the right structures so that we can change some models and business models to really benefit individuals? So I think that that's what I'm very excited about. And, I think that they're all very, very positive. And I know that, depending on who you ask, they might be positive or negative, but I think it's more important to think about the bigger picture and what does it do for the future of potentially financial assets. And I think it's all going to be very, very positive.
Yes, I think so too. Thank you so much, Josip. Josip Rupena from Milo, CEO of Milo, and Lorena Nessi from CCN. Thank you, everyone. See you later.